From ABC, this is World News Tonight with Peter Jennings.
Good evening. I wouldn't want to be around for a day worse than this. That is what the president of the New York Stock Exchange said when the market closed today, down by every conceivable measure, down by more than it's ever been before. The last Dow Jones count we have today is down 508 points, but they are still counting on Wall Street, and the final numbers won't be available perhaps until noon tomorrow. And it is down on every other world market as well. The actual numbers make it look worse than the great crash in 1929. However, this is 1987. The whole environment is different. Still in all, there's never been a day quite like it. We begin with our business correspondent, Stephen Ogg.
The panic was clear from the opening bell as investors large and small sought to get out of the market to sell at any price.
The market makes me feel very nervous now. It's going up and down every couple of days. It's time to get out.
For a number of major stocks, no buyers were to be had. Everybody wanted to sell. So that meant some well-known companies couldn't even open for trading for hours. Exxon, the world's biggest oil company, didn't begin trading for nearly 2 hours after the stock exchange opened. IBM was an hour and 15 minutes late. Shares of Walt Disney couldn't even begin trading until 11:12 a.m. That was an hour and 3/4 after the market opened. And then it traded for just 6 minutes until another barrage of sell orders hit. Then Disney didn't trade for another 2 hours. For dozens of companies, it was the same. And when they did open, it was down like a rock.
You have a definite element of panic in here because a lot of stocks are being sold down to levels that have not been seen for a year, maybe a year and a half. They're being sold down indiscriminately on the basis that people don't know where they're going to go or what point the market is going to stop, and therefore they sell the stocks out.
And the panic fed on itself. Take a look at the Dow Jones Industrial Average. At 10 a.m., a half hour after the market opened, it was already down 68 points. By 11, down more than 200. Around noon, it seemed to recover a bit. Then it plunged on down through the afternoon, closing at 1738.41, down more than 508 points for the day. In percentage terms, that's down 22.6%. By comparison, the biggest previous drop on December 12, 1914, was more than 24%, and October 28, 1929, was more than 12%. Among the most active individual stocks, such widely held companies as AT&T closed down 6 1/8 to 24. 2 weeks ago, before the big drop, AT&T was selling for 33.5. General Electric down 9 1/8 to 41 5/8. Had been 65 5/8. Exxon closed down 8.5 to 35. 2 weeks ago, Exxon was 49 3/4 and trading colossal. About 605 million shares changed hands, double the previous record. But comparing today's trading and that of the big collapse in 1929 brings up some differences. Then the trading was fed by margin calls. Few investors in those days owned their stocks outright. They'd bought them for 10% down, 10% margin. And to do it, billions of dollars had been borrowed from banks and brokerage houses that had to sell them out at any price just to try paying off the loans. Today, investors have to put up at least 50% of the price to buy on margin. But most of the trading is done by the institutions, which buy their shares outright for cash. So margin selling is less a factor in this drop. So what's going on here?
In our opinion, this market will settle down, but it's going to take time, perhaps several months, before we see a renewal of the favorable bull trend.
The market looked almost immune, resilient. Nothing seemed to dent it, and if anything, confidence and expectations on earnings this past summer were going even higher, even a peak. So I think we're coming down to earth. The question is, how badly bruised are you when you hit the earth?
So the selling today had nothing to do with why people bought the stocks in the first place. Future profits, dividends, good management, nothing mattered. It was just sell me out at any price. Peter?
Stephen, what's the effect of these enormous sales by the computers within seconds? Do they just jam up the system and set the panic going?
Well, I am told that they certainly add to it. Computer-generated trading can generate 80 million shares in a minute, and that certainly feeds that market panic, yes.
So that's in part what happened today, do you think?
That's what some of the analysts are saying, yes.
Okay. Stephen Ogg, thanks very much.